What's up, everybody? It's Tyler here at Treasury Orange. Today, we're going to be talking through Strive, that's ticker ASST's new preferred equity offering. I'm going to go through the presentation they had introducing it and provide some commentary. Just a reminder to you guys out there, we're on the cusp of hitting 1,000 subscribers. Great work in the first few months of Treasury Orange being live. In the next coming months, we're going to do a 100,000 SAT giveaway once we reach 2,000 subscribers on YouTube. So get out there, set your subscriptions to public, subscribe to Treasury Orange, and once we hit 2,000 subscribers, one of you lucky subscribers is going to win 100K SATs. You can also do additional entries if you live in the United States, Canada, the UK, or Australia. Sorry, those are the only countries we got it cleared in. But send an email that says Stay Orange to Tyler at treasuryorange.com, and you'll get an extra entry into our 100K SAT giveaway. Let's dig in.
This is our first security that is perpetual and preferred in nature. In terms of seniority, SATA is senior to our common stock, but would fall below debt that could be present in our capital structure in the future. The stated amount of SATA is $100 per share, and
So just an intro on this, Ben Workman with Strive is talking about how SATA will function basically similar to the preferred equities that Strategy already employs, where it's going to sit below their debt in the capital structure, of course. And as we know, Strive has no debt currently on their balance sheet. So I'm excited to hear about what this product looks like.
We'll have a cumulative dividend with an initial rate of 12% of the stated amount.
So there it is. It's going to have a 12% dividend based on a $100 par value. That's a pretty cool product. That's really similar to the STRC product that MSTR has. So they're going to pay 12% basically on $100 of this offering.
Additionally, SATA will have a moving liquidation preference with a cap of $110. While we cannot predict or guarantee the future price of the security, our intention with SATA is to maintain a trading range that's near its stated amount. We have a few mechanisms we can utilize to try to create this outcome. The first is a variable dividend rate, which can be adjusted over time. The second would be a potential future ATM, which we intend to establish in order to issue additional shares of the security, and we expect to use that ATM, subject to market demand, to help us maintain the price near the stated amount. And the third is a call option at $110 that we will also describe later.
So this is pretty typical of these preferred equities. Of course, first and foremost, Strive will want to hit the ATM as the price of this new SATA product drifts above $100 per share. That's basically a way for them to acquire more capital and purchase Bitcoin to put on their balance sheet, which is the whole premise of this product. And Strive's mission is to add as much Bitcoin as they can and collateralize that balance sheet, while this product allows them to pay that 12% dividend for people who want, maybe a lower volatility profile than Bitcoin offers with some more stability.
With that, I will hand it over to Matt Cole to provide an overview of Strive and the background of our treasury.
Thanks, Ben. Strive is an asset manager that was co-founded in 2022 by Vivek Ramaswamy with a mission focused on financial freedom. In May of 2025, Strive announced intentions to become a Bitcoin treasury company through a reverse merger with asset entities, which closed this September. Today, we hold 5,886 Bitcoin with no debt and completed a $750 million PIPE, and through related warrants can access up to $750 million of additional capital over the next year, making it the largest equity-only financing in the history of Bitcoin treasury companies. Following the merger, we have qualified as a well-known seasoned issuer with an S3 shelf and aim to become the first Bitcoin treasury corporation with a perpetual preferred equity-only leverage model.
It's crucial to note that Strive only have the preferred equity as basically leverage on their balance sheet. You'll hear them call this amplification as we move forward, but essentially it is, just a perpetual preferred equity product that it is offering, leveraged exposure to Bitcoin. So Strive have about $600 million on their balance sheet. They've got a shelf offering for their common equity, and they're of course going to tap basically a shelf offering on this new product that's going to trade under a different ticker.
In building our management team and our board, an unwavering and unapologetic alignment for Bitcoin with executive experience to run an institutional Bitcoin treasury strategy was essential. Our 6-person management team brings deep expertise across institutional fixed income, investment banking, reinsurance, legal, compliance, and Bitcoin treasury management, and includes multiple successful former CEOs. Our additional board members add complementary expertise in governance, policy, capital markets, and Bitcoin.
Yeah, so this is all stuff we know. Strive's got a really strong management team and a lot of Bitcoiners and traditional finance executives and players on the board who are going to provide a really strong strategic vision.
Less than 2 weeks after closing, we announced the first ever merger between Bitcoin Treasury companies with our proposed acquisition of Semler Scientific, the second publicly traded Bitcoin Treasury company. We also acquired True North, a leading Bitcoin media and research platform, which continues to be led by its founder and our chief risk officer, Jeff Walton.
Yeah, so interestingly there, Matt's touching upon the Semler Scientific deal. We haven't heard them talk a lot about it because they're limited in what they can say. But of course, adding all of Semler's Bitcoin to their balance sheet is basically accretive. It is an all-stock transaction. So again, they won't be going into debt for that. However, of course, there is risk that legacy Semler shareholders, if this deal goes through, may not be aligned with the vision that Strive has. So there could be some downward pressure on the stock in the near term when that merger closes. But time will tell. Time will tell if this deal actually happens, and time will tell whether or not Semler's shareholders, will be aligned with the long-term vision of Strive.
In addition to our equity capital raise of up to $1.5 billion, we established two complementary programs immediately after closing our reverse merger between Strive and asset entities, a $450 million at-the-market issuance program and a $500 million stock buyback program. Together, these provide flexibility to raise or return capital as market conditions evolve. With our first perpetual preferred equity offering, we're targeting an initial leverage ratio of up to 25% at IPO, balancing growth and Bitcoin exposure with a disciplined approach to risk.
Yeah, so again, basically, Matt's saying that they're leveraging their balance sheet 25%. So that implies that they're going to be targeting $125 million raise on the Bitcoin they already own, because they own about, at today's prices, around $600 million in Bitcoin. So that makes sense. They also, I'll back that up there. They mentioned they raised $1.5 billion in equity capital. So again, $750 million, as we've covered on the channel. Most of that went to purchase Bitcoin through the PIPE deal. And then they do have an additional $750 million out there in warrants. So that's basically 555 million more shares that can purchase Strive stock at the same terms as that PIPE financing at $1.35 per share. So there is going to be some gravitational pull towards $1.35 per share. Of course, when the warrants do get exercised, if it's trading above there, we won't know what price Strive will be trading at, so maybe the pull won't be as severe as it was with the PIPE deal. We'll see how much capital flows into the company between now and then. Again, as always, buyer beware until these warrants settle out. But it's good to see that Strive are getting this flywheel going.
The Strive Bitcoin Treasury model is intentionally simple. Our common equity functions as amplified Bitcoin, capturing the excess return above our financing costs for investors and benefits from any additional accretive alpha or beta opportunities to expand Bitcoin exposure. The preferred equity represents Bitcoin powered yield, our leverage toggle, and sits senior in our equity capital structure. Together, we believe they form a balanced and transparent framework. We intend for our common equity and SATA to be the only two securities in our capital structure for at least the next 12 months.
So that's interesting. Strive had promised that they're going to get out a preferred equity product as soon as possible. And they did it really quickly within 2 months of basically closing this reverse merger, was just incredible speed. But they did say this is going to be their only equity product, over the next 12 months. So they're really going to focus on bringing as much capital into this product that I think, as we'll see, is going to compete with money markets. Matt Cole, the CEO, and the team at Strive have a lot of work to do to educate the public, to educate would-be shareholders, maybe institutional investors as to why they should invest in this product that's backed by Bitcoin and can offer a better yield than other fixed income products out in the marketplace.
Prior to giving effect to the Semler merger, and plan to focus on building out the liquidity profile for SATA as both our common equity and preferred equity securities scale. And with that, I'll turn it back to Ben to introduce SATA and walk through the details of Strive's first perpetual preferred equity offering.
Thank you, Matt. We're very excited about the launch of SATA. This product is senior to our common equity. It's perpetual preferred. It has a monthly variable dividend and is designed to be able to maintain a stable trading range near the stated amount of $100. For those of you who may have worked in computing, SATA may sound familiar as a simple cable that connects a storage device to a computer's motherboard. In the same way, the SATA perpetual preferred equity connects Bitcoin-powered digital credit to traditional finance. Capital enters on the legacy rails, the store of value is upgraded through Bitcoin, and value flows back as a listed, familiar, rules-based security with an attractive dividend yield.
So it's cool to hear the little background on how they came up with the name SATA or SATA. There was always a debate among like hardware junkies who use SATA devices, whether or not it's pronounced SATA or SATA. I prefer SATA, but it sounds like the team's going with SATA. So yeah, I say GIF. Other people say GIF. You know how it goes. We'll see how that shakes out.
Same rails, new capability, linking traditional fixed income structures to next generation assets. The stated amount for SATA is $100, and the monthly dividend is set to start at 12% per annum of the stated amount.
So yeah, again, this product's going to be paid out monthly, which is really cool, and I think that fits the needs of a lot of investors who are looking for a dividend payment that pays out more frequently than just every quarter.
Expecting to raise $125 million with this initial offering. This would result in an initial expected BTC rating above 4. We believe under these circumstances, SATA provides many investor protections, including a targeted stable price range, structured methodology for any dividend decreases, a floor rate for the dividend, cumulative dividends, and an initial 12-month cash reserve held for dividend payments based on the initial offering amount and initial dividend rate.
Yeah, as we saw on that slide, their initial offering, they're targeting predicting $75 to $80 per share, which would be a 15 to 16% effective yield for people who get in at that IPO price. So if this is something that's interesting to you and you believe in Strive, the company, as a credit risk or lack of credit risk, and this is a product you're looking for, getting in quickly at that low share price will provide some pretty impressive yields. To get 16% on your money, you're talking just $100,000. That's $15,000, $16,000 a year. Not a bad product when you're talking fiat.
Dividends declared by the board of directors will be paid monthly for SATA. We've heard feedback from investors and seen the demand in the market for similar securities that indicates investors see value in the higher frequency monthly cadence for dividends. For SATA, the first day of the month will be the record date, and then on the 15th of the month, we'll pay any declared dividends and set the next month's rate for SATA.
Yeah, so basically, if you hold the security SATA on the first day of the month, you're going to receive that dividend 2 weeks later.
Cadence will continue as our standard monthly practice.
So crucially, remember guys, this product can be changed every single month. They can change the rate that the dividend pays, and it looks like Ben's going to get into how they're going to use that to target the $100 par value or $100 target price.
We have a number of tools available to execute the SATA credit strategy and make this instrument a success. Within our target range, we will have the ability to both adjust the SATA dividend rate and the SATA issuance rate via the ATM we intend to establish to maintain our target. When the price falls below our target range, we will cease selling any SATA per the expected ATM, and we will also have the option to increase the dividend rate. So what happens if SATA trades above our target range? Well, in that scenario, we could decrease the dividend rate. We could issue SATA via a secondary offering at or below $110.
Yep, so this is really similar to the stretch product STRC that Strategy offers. Interestingly, Strategy targets that same $100 par value that Strive is looking at with SATA, but Michael Saylor and his team are targeting basically $99 to $101, which is 1% forgiveness in each direction. But Strive with SATA, it looks like they have a 10% band that they're trying to stay under. So obviously, we realize that you don't want a lot of volatility on this product once it starts settling around that $100 target. But Strive have kind of built in a 5% wiggle room each way, and I think that's probably just to cover their butts in times of volatility or in times when a lot of capital might leave this product. It gives them a little bit of wiggle room as they're changing that dividend payment. So yeah, as we see it go above $100, once they get an ATM on this product, they're going to hammer that ATM to get it back down. And when it goes below, of course, they'll increase the dividend. If it goes above, they could, of of course, decrease the dividend, which is something they might take a look at in certain circumstances. But I do expect this guidance, if this product is a success, I think they'll take a look at changing those target numbers from $95 to $105. I think they'll tighten it up to maybe 96, 97, 98 in a similar way that Stretch, really tries to hug that $100 par value.
Well, as you can see, we expect there will be several tools at our disposal to manage this instrument and respond to various market conditions we may encounter. At Strive, we believe SATA is positioned to win. From day one, we're optimizing our capital structure and matching a long-term pristine asset in Bitcoin with long-term liabilities. We believe our blend of Bitcoin and fixed income is built to scale and has the potential to create lasting value for shareholders. We are laser focused on our strategy and thrilled to be bringing SATA to the market.
Yeah, so Strive are delivering, of course, on what they said. They're building out a preferred equity product that again is a competition with money markets. If you've got cash sitting in a 3.5-4% money market, but you believe in a company like Strive, why wouldn't you park it in their preferred equity product if you believe in the credit quality of the company and that they're going to follow through on what they say and keep that price from being volatile on SATA?
Thank you, Ben. This slide shows the pro forma credit profile for the initial SATA launch.
Jeff Walton, the Chief Risk Officer, talking here.
Of the target $125 million capital raise, our projected Bitcoin holdings will be approximately $751.7 million based on prices as of October 17th, resulting in an initial BTC coverage ratio of approximately 6 times, reflecting the amount of Bitcoin on balance sheet supporting the preferred equity. The anticipated annual dividend payment is $15 million, assuming a dividend rate of 12%, and our initial estimated dividend coverage ratio is a robust 50 times, meaning our Bitcoin assets exceed the annual payout by over 50 times.
Yeah, so again, these are similar metrics that Strategy use. The BTC rating or BTC coverage just implies that they have 6 times the Bitcoin to cover this preferred equity product, and they've got 50 years of dividend coverage at the initial $125 million notional value of the capital raise. We'll skip ahead here because I know you guys are pretty comfortable with those metrics.
Let's dive deeper into Bitcoin coverage. On the left, you'll see that with 125 million preferred issuance, our pro forma Bitcoin holdings provide a 6 times coverage ratio if 100% of the proceeds are used to acquire Bitcoin.
Long story short, he's saying, if Bitcoin crashed 84%, they'd still have enough Bitcoin to cover the outstanding notional value of this preferred equity. So this is, again, something we're really familiar with. Jeff covers a lot with True North, and Michael Saylor and Fong have talked about extensively with Strategy. And, this is kind of part of what S&P doesn't understand. We covered how Strategy was rated as a B- by S&P's credit rating arm of their company. Of course, they're not really lending credence to Bitcoin as a legitimate capital asset, but Jeff, Matt, and team have a long way to go to educate, especially institutional investors who aren't familiar with Bitcoin as collateral.
One of the most common ways traditional fixed income investors view risk is through the lens of dividend coverage ratios, which we explore here. On the left, you'll see our pro forma Bitcoin holdings compared to the pro forma annual preferred dividend payment, showing over $751 million of Bitcoin capital set against a pro forma $15 million in annual dividend payment. On the right, we're giving you 2 ways to look at that risk. The top chart shows how annual Bitcoin returns translate into dividend coverage through earnings. If you believe the future rate of return of Bitcoin is 10% or greater, there's a strong dividend coverage simply through the earnings on the Bitcoin. If you look at the actual compound annual growth rate over the last 5 years, 59.7%, which is nearly double what we've modeled, you see extremely robust BTC earnings dividend coverage ratios. The lower chart highlights balance sheet strength and downside protection, 2 areas where Bitcoin treasury companies stand apart from traditional credit issuers. Operating with a substantial balance sheet provides a structural advantage when it comes to dividend security. Our pro forma balance sheet, without giving effective to the similar scientific transaction, includes $751 million in Bitcoin assets alongside the $125 million perpetual preferred raise. At a 12% dividend rate and assuming no future preferred stock is issued, this equates to 50.1 years of dividend coverage, meaning our pro forma capital could fund annual dividends for 5.
Yeah, so again, just showing how they have so much coverage based on their capital, i.e. Bitcoin, to pay the dividends on this, and credit quality will improve if they close the merger with Semler Scientific. Again, we don't know how that's going to affect the common equity in the near and medium term, because it could have a downward pressure. It could be accretive and provide that Bitcoin alpha that Matt's talked about. Adding that capital to the balance sheet does increase the credit profile of Strive and their ability to cover these obligations.
Included a NYU.
Of course, stipulation that of course, if the merger is complete with Semler, they do take on all of their potential liabilities. So a key asterisk there: if there are unforeseen liabilities that crop up via lawsuits for Semler or something like that, or an issue with their medical business, that is something that is a risk to the acquiring company, of course.
Stern industry level view of interest coverage ratios in the table on the right, and how they translate into credit ratings and spreads. This is the standard way the broader market looks at risk, using EBITDA divided by interest expense. On the left, we're showing our illustrative BTC earnings-driven dividend coverage ratios, represented from the prior slides. Out of an abundance of caution, our data does not represent an official rating and may not be mapped one-for-one with these showcased industry metrics, but putting the two frameworks side by side helps you contextualize what we believe is the relative strength and showcases our sense of how our credit profile may stack up against what you would expect from a traditional issuer under different Bitcoin performance scenarios.
Yeah, so that's interesting. He didn't explicitly say it there, but if Bitcoin only compounds at 10% annually, which is right in line with S&P growth, I don't think Bitcoin and the S&P are like for like comparisons, but just assume Bitcoin only appreciates at that compounded 10% annually, and they're paying a 12% dividend on this product, in line with industry credit ratings. You're looking at basically an A or A plus rating for this product from Strive, which is, again, just makes you laugh at the B minus rating that Strategy was given by S&P recently. So, A plus is the third highest rating. If Bitcoin compounds at 30% annually, like a lot of us think will continue to happen over the next decade, they're AAA rated with great ease. So take that as you will. Again, as Jeff said, it's not an actual credit rating, of course, but if Bitcoin does what we think it does, this product's going to be something that can really compete with super strong credit companies.
And that perspective shapes how we think about portfolio risk and treasury management. Looking at the chart above, you'll see Bitcoin's compound annual growth rate has been 59.7% since January 2020, and an even more impressive 71.5% since 2015. The lower chart tracks the rolling 4-year compound annual growth rate for Bitcoin. The striking takeaway here is that across Bitcoin's entire history, the 4-year rolling growth rate has never been negative. Even today, after a period of substantial volatility and measured against past cycle all-time highs, the 4-year compound annual growth rate stands around 15.3%. We believe this showcases the resilience, adoption, and long-term growth potential at the core of this asset. Risk management is a core priority for us, and that includes actively monitoring capital adequacy and market conditions across the portfolio. Where appropriate, we may seek to implement downside tail risk protection to help manage future liabilities. To do this effectively, we would seek to partner with leading tail risk management firms and specialists to help minimize the cost per unit of risk hedged by identifying correlated market hedging products. While these plans are still in early stages, we believe this approach could potentially enhance our ability to handle extreme market events and protect capital even in periods of unexpected volatility.
Yeah, so interesting. They're talking about, just really protecting their downside risk and using either derivative or insurance products to basically just hedge out some of that tail risk if Bitcoin has a big drawdown.
If you're a Bitcoin maximalist and you believe in Bitcoin and you're looking for credit instruments, we believe you would be very enthusiastic about the unique credit profile that we're creating here. As many of you know, we've reached a definitive agreement to acquire Semler Scientific. For illustrative purposes, this slide shows the pro forma Bitcoin coverage ratios following the proposed transaction.
Yep, we talked about how just adding that Bitcoin from Semler is going to really increase the BTC rating and the coverage ratio. You can skip ahead from there.
Thank you, Jeff. This slide illustrates how adding SATA to a portfolio may enhance risk-adjusted performance. When SATA is paired with preferred equity ETFs like PFF or PGX, the combined portfolio shows lower expected volatility and higher yield, moving up along the efficient frontier. The same effect may be seen with high-yield ETFs such as HYG, where SATA both reduces expected volatility and increases return. Even with dividend-focused ETFs like SCHG, HD, or VIG, we believe the addition of SATA lowers expected volatility across the portfolio, improving overall risk-adjusted performance. This slide compares dividend yield per unit of risk across asset classes. Rather than looking at return or volatility in isolation, We focused on yield relative to expected volatility. The existing strategy perpetual preferred instruments have delivered superior risk-adjusted yields compared to preferred equity ETFs.
Yeah, so this is something we talk about. Bitcoin does just basically provide better risk-adjusted returns when you combine it with other parts of your portfolio. Looking at those Sharpe ratios, having 1-2% Bitcoin in a blended portfolio with equities just provides amazing compounded risk-adjusted returns.
The demand for Bitcoin-powered perpetual preferred equity this year has been remarkable. Strategy's initial offerings totaled $1.5 billion, but investor interest drove an additional $4 billion in upsizing in the primary offerings. Including ATM issuances, they have now raised more than $6 billion in aggregate. STRC, their variable rate perpetual preferred equity, became the largest IPO of 2025 at $2.8 billion notional issued.
Yeah, so these are things we've talked about too, and Matt's just hammering home that there has been some really great demand for these products, especially in line with the IPOs. And of course, STRC had the biggest IPO of any company in the entire marketplace, which I think says enough right there. We're curious to see, if Strive will be able to fill the $125 million they're seeking, if they'll be able to upsize it. Certainly, I think that high yield is going to be something that'll allow them to, tap into some markets that are looking for that yield. I think there's probably a lot of Bitcoiners out there too who want to maybe reduce their risk profile, who might have some cash or Bitcoin sitting on the sidelines and might seize this opportunity. Maybe Bitcoin focused hedge funds or other hedge funds that want to use this opportunity to get that Bitcoin backed yield.
When we place this demand in the context of traditional fixed income markets, the current size of perpetual preferred equity remains small, but we believe the opportunity for market growth is enormous.
Yeah, this is an interesting point here. So, Matt's saying how the preferred equity market is pretty tiny in the grand scheme of things. When you look at mortgage-backed securities, you look at U.S. Treasuries, junk bonds. I do think the preferred equity, these Bitcoin Treasury companies are changing the landscape for preferred equities. Once the education gets out there, which could admittedly take years, Matt and his team are going to have to really hit the pavement trying to sell this product, I think, through some really unique ways, in the same way that, every time Michael Saylor's on CNBC or Bloomberg, he's talking about these products. But I think this preferred equity route, once people realize how great of a product is, and especially with SATA being a product that pays a monthly dividend, you're going to see a lot of people searching for yield really consider a preferred equity product for the first time. Whether or not brokerages will wrap their head around this and list the preferred equities, time will tell. Of course, famously, Strategy's preferred equities are listed, pretty much everywhere. So we'll see if SATA can pull off the same feat. And the biggest thing is really getting these brokerage houses, these financial advisory firms, to allow their financial advisors to place their clients into this product. A lot of them have, cash sitting on the sidelines. There's $7.8 trillion out there in U.S. money markets, last I knew. And if even if 1%, 2%, 3%, up to 10% of trapped money in these money markets can move to a product that has a, palatable risk profile, such as STRC, such as SATA, I think that's just a ton of capital that's going to come in and purchase Bitcoin. So these guys are really shooting for it, and I love to see that they're really gunning for that market.
The combination of higher yields and attractive risk-adjusted characteristics create room for meaningful expansion. As Bitcoin treasuries continue to scale, we believe perpetual preferred equity instruments that align Bitcoin as a long-duration asset with a long-duration liability will attract increasing investor demand and begin drawing capital away from conventional debt markets. This slide shows the largest 20 Bitcoin treasury companies today. In May, Strive held no Bitcoin. Today, we hold 5,886 Bitcoin. And if the Semler transaction is approved, that number would rise to over 10,900 Bitcoin. Among public companies, Strategy, Metaplanet, and Strive have announced a laser-like focus on perpetual preferred equity leverage model to power their Bitcoin treasury strategies. We believe this approach will drive a long-term, market-leading MNAV for Strive, as our structure offers attractive Bitcoin exposure to potentially compound long-term returns for common equity investors, and a compelling yield opportunity for Bitcoin bulls through our preferred equity.
Yeah, this is interesting. This is something we've talked about too, is every Bitcoin treasury company going to make it? Heck no, not by any means. But these ones that are stacking a lot of Bitcoin, of course, no one's in the same stratosphere as Strategy. I think there is room for these companies that have 10,000, 20,000, 30,000 Bitcoin to build out those preferred equity products that are attractive to the marketplace.
Together, we believe these complementary instruments create a balanced and scalable capital market built for sustained value creation. This slide places Bitcoin in context among the world's largest assets. Today, Bitcoin ranks as the 8th largest asset globally, just behind Amazon and silver. A theoretical Bitcoin price of $215,000 could make it the second largest asset in the world, trailing only gold. This rapid ascent highlights both the speed of adoption and the structural shift underway in global capital markets. Bitcoin is no longer just a speculative asset. It is becoming a reserve and yield-generating foundation for public companies and institutional investors.
Yeah, I think that's going to be a key tipping point that we've talked about too. Once Bitcoin surpasses all of the equities in the marketplace and trails only gold, maybe it's going to take sustained prices above the Mag 7. Once it's an asset that's that large, I think a lot of traditional finance people or people who have doubted Bitcoin or economists who have doubted Bitcoin are just going to have to capitulate and realize it's here to stay. Maybe that's the tipping point where S&P kind of gets their head out of their butts and can properly rate these companies or include them in the S&P 500 index.
In summary, SATA is a perpetual preferred equity. It has a stated amount of $100 and will have a cumulative variable dividend with an initial interest rate of 12% of the stated amount. SATA will have a moving liquidation preference with a cap of $110 and will also have a call option at $110. While we cannot predict or guarantee the future price of SATA, our intention is to use each of the tools at our disposal to maintain a trading range that's near its stated amount of $100. At Strive, we believe Bitcoin is the hurdle rate for capital deployment and the benchmark against which the performance of all assets should be measured. Our simple capital structure allows us to focus on driving value for our common equity while building our desired leverage through our perpetual preferred equity, SATA. This streamlined approach and our intention for our common equity and SATA to be the only securities in our capital structure over the next 12 months enables us to concentrate on fostering liquidity across each product we offer.
Yeah, I love the strategy there. And we can kind of wrap it up here, seeing that Strive is going to be laser focused on building liquidity and raising funds on this product over the next year is something that's really cool to see. We'll see if they do some other alpha generation strategies by maybe some Bitcoin acquisitions, because there's a lot of companies under stress right now that have Bitcoin and are trading under their net asset value. So maybe Strive steps in there if they can raise some more funds. Maybe money from the warrants could go toward acquisition of those companies, or maybe they do just some stock deals. Yeah, it'll be interesting to see how much Bitcoin they accumulate over the next year, if they can catapult themselves into the top 5, 6, 7 companies. And we're pretty excited about this product. If you're looking to dampen the volatility on Bitcoin but still earn a good yield on a product that's fueled by Bitcoin, and you believe in the management team of Strive, you believe in the credit risk of Strive as an entity, this could be a product for you, especially if you've got a short to medium term time horizon for some funds that were otherwise sitting in fiat, just earning a small interest rate. So there you go. That's SATA. Thanks for watching, guys. Don't forget to subscribe. Once we hit 2,000 subscribers, we're giving away 100K sats. And shout out to me. Send an email that says Stay Orange to tyler@treasuryorange.com. You'll get an extra entry into that contest. And we're going onward and upward. See you next time.